Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Balloon. We've got longtime fools Lou Whiteman and Jim Gillies giving a 1 to 10 rating to engine parts maker Garrett Motion, ticker symbol GTX. Rate the strength of Garrett Motion's business, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Both of you have 7s, Lou.
Yeah, this is a boring old auto parts supplier. But here's the deal. Over time, the way to make money on the auto industry is a well-run supplier, not the OEMs. So this business primarily, it's turbochargers for gas and diesel engines. These make engines more efficient. And in a world where gas-powered vehicles seem likely to stay around longer than some of us had hoped just a few years ago, Garrett is an important part of driving those engines to be more fuel efficient and a big thing companies need to invest in. There's also exposure to EVs and fuel cell components, so it isn't just a dinosaur. Real thing is that this company has a fresh lease on life. It was spun out of Honeywell back in 2018, along with a lot of legacy asbestos liabilities. The liabilities were too much to handle. A trip through bankruptcy has given Garrett a fresh start and has allowed the assets that do work to shine. I like this business.
Yeah, I mean, I am a 7 as well. It's maybe a little quaint now to talk of reduced emissions or improved fuel consumption, which is what, as Lou says, is what turbochargers do. These are still vital auto parts, and plus they have a full array of emission reduction technologies for diesel and hybrid makers. That includes regular hybrids or plug-in electric vehicle hybrids, and as well, with fuel cells and other battery electric vehicles. But don't look now, but a lot of the major OEMs are kind of stepping back from their previously grandiose battery electric vehicle plans. And I think that's going to be a stealth driver of actually Garrett's business, because one of the reasons that they were so cheap coming out of bankruptcy, and we're going to talk about that in a minute, was because, the turbocharger is going to go away because everyone's going to drive electric cars. And it doesn't look like that's the case right now.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jim's at an 8. Lou, you're at a 6.
Yeah, so Oliver I think it's Rabelais. I think he pronounced like the French, right, Jim? He's been with Garrett since the Honeywell spin out. He had been with Honeywell since 2002, so a real long timer here. It's been a long, strange trip for this company. I don't blame him for the bankruptcy, I'm not going to call him a visionary for coming out of it either, though. For the most part, he seems like a fine manager who knows what he's doing and knows how to keep those big institutional holders that are part of this story happy. That's all I ask. So better than average, but, not a wow for me, a 6.
And see, I actually have a slightly different opinion. I thought it was strategic brilliance that kind of rooked his former employer because, as Lou mentioned, Garrett did come public with the turbocharger business, was nice, but they also snuck in, they being Honeywell, snuck in the asbestos liabilities for their Honeywell's former ownership of something called Bendix Brakes. And the obligation was long-term and indeterminate in terms of price. It was as much as $175 million a year for up to 30 years. So they could have paid out about $5.25 billion in theory for asbestos obligations. And Rabelais, in COVID, when they saw things slowing down, he took the opportunity to say, I'm going to push my company into bankruptcy. I'm going to arrange an equity partner group. I'm going to get a real fixed price on these liabilities. And then what he did is he paid it off. I actually thought it was a brilliant strategic move. I really liked that. And with the equity partners, he's now starting to get them out as well at a profit. I actually think it's been a masterful work, so I love it.
All right, for financials, a 10 is a fortress, a 1 is yikes. Jim's at a 7, Lou's at an 8.
Yeah, so about $500 million in operating cash flow in the last 12 months, and much of that is going back to shareholders. Garrett's reduced its share count by 26% since July 2023, just announced a new buyback in December, so more to come. I don't see that slowing at all. Turbochargers, Jim mentioned a pretty attractive market with opportunity for growth from here. Garrett still largely in the hands of the private equity firms that funded its exit from bankruptcy. Those firms will naturally want to exit over time, and being a profitable company able to push excess cash into reducing the share count. That's a winning formula with this, with what's going on here. And that's what Garrett is. 11 times earnings, well below some of its auto parts peers, and there's a lot to like here.
Yeah, Lou's correct about the buybacks. Maybe a little too conservative. After the bankruptcy emergence, one of the things they issued to the equity partners was a Series A preferred stock with an 11% dividend. Yikes. If you added the common shares and the preferred, which were exchangeable 1-for-1 into common, you had about $310 million. Eventually, once the company paid off those asbestos liabilities, they forced conversion of the preferreds. They first bought back about $570 million, I think, and then converted the rest to common and then got in the aggressive buyback. So we're now 195 million shares most recent quarter versus about 310 million right after they emerged from bankruptcy. Got rid of that 11% dividend too. They have more debt than I'd like, to be honest with you, and I would probably score it higher if they did delever a bit.
All right, Jim, let's move on to valuation. How well will Garrett Motion stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Well, it's been a nice hold for the last couple of years. I think it's slightly more than doubled, introduced a dividend, but I think you're still going to primed for about a 10 to 15% annualized return from here. My safety score is a little bit maybe lower than other people would think. I've got it at a 6. That is solely because of the amount of debt they have. It's about close to about 1.5 billion. If you knocked, say, a third off that, I'd probably score my safety score higher.
Yeah, so I'm at 10 and 15 too. As Jim said, I think it's about a near double in the last year, so I don't think that pace can continue. But look, you're right on the debt. The other side of that is they're generating so much cash. Worst case for me that they just kind of ease off of the buybacks if they worry about the debt. So I think there's a lot they can do. There isn't a moat making turbochargers, but scale matters, and having the right relationships with the right partners matter. They have all that. I see a lot of consistency here. So my safety ended up as a 7.
Thanks to both Lou and to Jim. They've given Garrett Motion a solid overall score of 7.1 out of 10 with no top-its. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the Simply Good Foods Company. Till then, Fool on.
Yeah, Jim, that's a fun thing about Garrett. It's like at my end of year, I was like, all right, this is an auto parts maker has doubled. Is it time to go? And you look at it and you're like,
nope.
I'll settle for 10 to 15% from here, especially total return, like you say, anyway.